Hello, traders. It's 8:02 a.m. in Chicago on the 19th of March, 2019. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the index futures are opening higher. We have a pretty good sized gap going. We're opening about 10 points above yesterday's close. Pit close, we're making a run for it again. So it's a risk on. The DAX is up 153 or 155 points, popping around all over the place. It's up 1.35 to 1.3%. The Euro stocks are also up 1%. Gold, interestingly, is also up $7.20, trading at 1308.60. The Russell Strong this morning up 7.2 points. And the laggard is the SIBO Volatility Index, trading at 1485, down 18 cents. The bonds are off 20 ticks. The Bund is off 51 ticks. And the US dollar is off 18 and a half cents. That's how things are shaping up. Overall, we've got risk on sentiment this morning. So just take that into account as we come in to the day. Looking at what is ahead, we did have some numbers overnight. The German zoo survey came in much better than expected. The prior is negative 13.4. The expectation was negative 11. And they got negative 3.6, so much better. We do get U.S. factory orders at 10 Eastern, 9 Central, expecting 0.3. And that's really it. The Bank of Japan meeting minutes this evening. And we get API crude stocks after the close at 4:30 Eastern as well. That's really all that's on deck for today in terms of the calendar. Let's take a look at what we expected versus what we got yesterday. What a day. So yesterday, the expectation was, given the way we closed on Friday, the expectation was an attempt higher towards 1834.35 and then failure back down through into 28.23.50. That's the main expectation, and then hold sideways for the day. The secondary was an attempt higher that pushes down and then starts to trend down towards 28.10 or so, or 28.16 or so. And then the third scenario is it attempts to push lower, and then we get an open test drive higher, and then we start to trend higher towards 28.45. Here's what we got, which is really unusual. And things have been unusual for some time, and I need to stop using that word because the market is like a person. You know, once the characteristic changes and it kind of repeats itself, that becomes the new usual. So it's normal, but it is difficult to read, in my opinion. It's been difficult to read for a little bit of time, as it seems like there's an undercurrent, there's a tide that is pushing directionally with minor pullbacks. Yesterday we had an open drive type open, or a driving behavior. I don't know if I'd call it an open drive, but it definitely was driving behavior. We had the market pushing higher from the open. The open is right here. These green dots are the session open. Important price because it tells us where the participants sought to continue the auction once the market opened the next day. It one-ticked the open and then pushed straight up, as you see there, on straight up delta, straight up positive delta, and then the pullback to the mid, the short-term mid there, and then continuing to expand as it pushes the what looked like the opening swing high at 33.50 all the way through, pulls back to 33.50 right there, and then another push through the prior day's high. Uh, Prior day's high and above the overnight high. And so from the very beginning, from the open, just as soon as we saw this, I issued a warning to Convergence members to just lay off the shorts. The shorts are not going to be worth it. So that right there just saves, hopefully, those who heeded that advice, which is not always correct, as nothing is consistent in the market. That's just the nature of the beast. Um, those who heeded that advice would save themselves from a very frustrating day. And so what we did is we continued to push with very shallow pullbacks. The pullbacks are in the 2.5 point range. You can see down here the up rotations are pretty dominant. Up, the down rotation is small, up, down rotation small, up, down rotation small, and so on. So up, and this down rotation took forever because it was a zigzag, smaller, and then we finally get some rotation expansion to the downside on this leg right here, which brings us back to the prior day's high and the mid, which is a setup for me. Those who've been around a while know that I pay attention to the mid a fair amount. It's pretty good. It's a pretty good gauge as to where the auction is. Comes back up and then goes right to the mid to the on the touch. Perfect touch of the mid there on the nose, and then extends the IB very small by 1 tick. So what we have here is a classic 1 tick failed auction. It extends at 1 tick, pushes down, attempts higher, and then we get this explosive move down of about, what was it, 10 points. This leg is 10 points. So now I'm looking to the short side. So all of this up to this point, looking long. Okay, nothing, no evidence that short is the way to go. Although there was a fair amount in the order flow here that said, wow, these buyers just cannot get through this wall of selling. And then it lets go, pushes, and it becomes neutral on the day. So we took out the IB high. We didn't have a range extension there. It didn't take it out by more than 3 ticks or so. And then we took out the IB low, so now we have a neutral day. Pretty good chance for this to pull back to mid and push to our potentially to our prior day's 23.50 low volume node. That's what I was aiming for. I was looking for a pullback to 35 and a stop above 36.50 for a target of 23.50. And as you can see here, it looked good, then it didn't, and then it was over. It just kind of sat sideways, filled the middle. The profile at this point was looked kind of like this, and it filled that middle in and made it boxy as it bounced in the middle, and then it took off into the close to close on the IB high. This is a neutral day. Again, we see a situation where we have an IB high breached, IB low breached, and then we have a breach of the original IB high or IB low. We don't see that often where we breach one side, breach the other, and then go across and breach the other side, the first side again. Generally neutral breaches one side, the other, and either continues to give us a neutral extreme or is neutral normal where it finishes somewhere inside of the initial balance, inside of these yellow lines. And this went to the extreme. This is not a neutral extreme close. This is it's closing inside of the IB. Technically, it is a neutral normal day, so it's a neutral day. And neutral generally signifies that the market really made a try for one direction, and then reversed itself. It's a sign of it's a potential sign of initial capitulation in a trend. So if this had closed neutral down and finished somewhere in here like it was doing, then I would start, then this morning I would be talking about the potential for a move down and balance as we work our way through the structures we've left behind on the lower side. But that's not the case. That's not the situation here. We had pretty good buying into the close. The delta yesterday hardly breached the zero line. You can see it. Let's expand this to see what the delta is doing. Remember, the delta is valid now, given, let's change this so that it's a little more clear. There's the zero line, and you can see us falling beneath the open here, and the delta just barely breaches the zero line and finishes at highs. Yesterday there was a some pretty good lifting into the close. It seems like the buyers just could not back off. And given the way this closed, given the ledge that we left behind here, look at this thing. What a formation. Geez, that's just, you don't see that. You see that in the market profile where you have time, but you don't see volume forming like this, like a megaphone or something. This is just really, really odd behavior, I've got to say. So, with that being said, the expectation was for it to continue higher. However, I didn't expect it to continue higher as much as it did. It really ran pretty good overnight. So you can see it here. We open up, we immediately go higher, which is expected given the way it closed. The auction was interrupted with buy the cash and the pit closed, and then it just went sideways from there. It's just sideways, 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 sideways until about the time for the zoo figure, which was around 5 a.m. Central or so, right in here. We get the zoo figure out of Germany. It's a pretty key figure, and it just takes off. And now we have a double distribution profile overnight. We have pretty decent volume, and the market is trading. The market's got a pretty weak high. This point of control here comes to us from October, is brought to you by October 10th, the big selling day in October. Go check it out. Take a look at that day. That's our template day, October 10th, and we go and hit that point of control, the naked point of control on the dot, 28.53, to pull back and hold steady and balance at the top with a weak high, and the market is above above the overnight point of control, above mid, above VWAP, and is poised to continue to push higher. So that's what's up. That's what's happened today. So the inventory overnight is long in price and in delta or volume. So that's how things set up. As far as what we're looking for today, buy whatever you can and hold. That's today's scenario. No, I'm just kidding. Just buy and go away type of thing. So today's scenario, what are we looking for in terms of what the market is likely to do? This morning, we have an open auction against the overnight high. I'm expecting an open auction out of range. Remember, we're looking at, let's just freeze this a second and go back to October in case some of you don't have the data. We're going to go back and look at what we did the last time we were here. This is October. Okay, this is the big selling day in October. That's what we're trading currently. This is October. This is the point of control that we held in the overnight high. That we held in the overnight high, and the next key figure is going to be 28.59.50 or so above. Above that, it's going to be 28.69 and so on and so forth. It's important for you to review this template day. The last time we were here, it's important to view what the auction did. The key cutoff areas such as this 2843 and so on, 2843, 2848. That's where these stock zones are coming from. It's important to review those areas and be familiar with that profile. It's actually pretty good to have that sitting aside as you are trading to monitor what's going on there. So what are we looking for today? Open auction. I'm looking for a dip down into the 28.48 or so. I'm not looking for the gap to be closed. I expect the gap to remain open over here. We have a pretty decent chance at the overnight point of control statistically, but it might not push down. And then I'm looking for it to push through to 59.50. That's the low volume node above, the key low volume node above the point of control from the 10th of October, expecting that to be tackled a little bit, pull back, push through, and hold. We do have FOMC on Wednesday, so there's some potential hedging and rebalancing at the close. But you know, it's really a buyer's market, right? The secondary scenario, open auction pushes through the overnight high, gives us some noise, attempts to go lower, and then pushes higher and just holds steady for a balanced day with 10 points in a gap. So we've seen that quite a bit where it just it's the energy is all dispersed, is all expended overnight, and then we hold somewhere in the middle. Now remember, yesterday's low is right against the prior day's point of control. So what we're seeing is really the trader time frame that is really respecting day time frames quite a bit. So I expect that to continue. So I'm trading against the VP levels. I'm trading against just price structure that's been created in the past. I'm trading against market generated intraday market generated levels and so on and so forth, because we haven't seen a clear run where it's an open drive that just doesn't give a darn about what's in the way. It does seem to be respecting day type areas, so I'm going to pay attention to that. I do expect us to hold a gap though, and those are the two key scenarios. Now, with a gap up or a gap down that is out of balance, we've been in balance here for a bit. There's a risk of an open drive or a driving behavior that's an initiative. If you see the market open and run directionally right off the open, back off the opposing side. Do not fade that. It is just really low odds. It's a dumb trade to see that the market is pushing directionally and to try to pick a top if it's pushing higher, try to pick a bottom if it's pushing. It's a low odds trade. Yes, it can pay quite a bit, but most people who are listening, and it's no offense to anybody else, it's just the truth. Most people who are listening, if you do fade and you do catch the turn within your stop, you fade it, it goes a couple ticks against you, and then it turns. Most people trade watching are not able to hold that kind of trade for long enough or for far enough to make up for all the prior 20 times that we tried to catch a top or a bottom. So it's just not a very effective strategy. It's a very low odds strategy because we sit there and fish for the market topping, the market bottoming. We're trying to pick a top, pick a bottom. And then when we do catch one that doesn't stop us out, then we're not holding on to it, you know, for the entire day or 2 days or 3 days to make up for all those stops we took before that. So it's not a good plan for most day traders to try to do that. So be smart. If you see an open drive, if you see the market driving directionally, trade with the tide because it lifts everybody up. So good luck today. Hopefully that was useful. I want to remind you yet again, I apologize for having to do this, but we're reaching the limit to how many people can be on for the webinar for Thursday with Ira Harris. We're going to talk global macro trading. We're going to look at a trader who's looking at the big picture, what central banks are doing, what governments are doing, where the money flows are, and so on, and then trades from that perspective. The great thing about having Ira on is he helps us step out of our small window of time that we trade in. Make sure you register. Go to ct.pro/03/2019 IRA with a capital Y. Very simple. It's also in the description of the video that you're watching. Good luck, and I'll catch you tomorrow. Take care.